afternoon, welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is August 31st, Friday, for the weekly wrap-up. Let's get right into the market, see where we closed here. Corn for the December contract trading down 8.5 on the day, closing off at $8 even. Beans down 9.5, trading at $17.54 for the November contract. Wheat was down 14.25, trading at $8.88 3/4, and Kansas City wheat traded down 10.5. Finishing off the day at $9.05.5. Logan, we saw some selling here this Friday. What caused it, and do you think it could continue next week?
Yeah, well, certainly something that the trade was watching earlier in the day was Ben Bernanke speaking about 9 a.m. Central Time here. There were a lot of speculation if he was going to announce another round of quantitative easing. That speech was really turned out to be a non-issue here for the markets in general. There was some indications of what's going to be coming down the road, but nothing substantial here. It does look like the grains are just pulling back a little bit. Coming into a long 3-day weekend, we had soybeans closing at contract highs yesterday, so it's not surprising to see a little bit of a pullback here. If we kind of look at what the funds did today, they actually put on net short 8,000 corn contracts. That certainly was helping push that corn contract lower. And if we actually take a look at the Commitment of Traders report right now, we did just get this. As you can see here, the vertical axis is net long positions held by the funds. And we've been watching this very closely. Historically, right now, the funds are extremely net long in this corn market. And as you can see here, when the funds decide to leave the market, they certainly have a lot of contracts that are going to need to sell. That will put downward pressure on the market here moving forward. Cody, what are we kind of looking at right now from a technical standpoint here in general after this week's action?
Well, one thing I wanted to note here, I'm actually looking at the soybean contract, the November soybean contract, and I'll be talking a little bit more about this, I guess, later on in terms of basis. But let's just look here. I mean, one of the things you note is that we paused and we cupped highs and we broke out our new highs, and now we've been pausing. But the thing that makes me just a little bit nervous here is in the last couple of weeks, we've been making these new highs, but we've also been making these lows in terms of the shorter term time frame. Right. And what this does, this is kind of a megaphone top, they call it. It's increased volatility, and the thing that gets me a little bit nervous is we broke out of that previous high. Now we're up around this area, and it seems like the market doesn't really know what it wants to do. And I think that if when we have that sort of pause and that lack of certainty in terms of direction, I would be worried here that we could actually come back and we could see some selling. I mean, like you were talking about, we're very, very long in the agricultural sector.
In general.
Yeah, and if we see some selling, I mean, we could just see it unravel quickly. So I would think that at these price levels, it's really prudent to look at this and try and lock them in, try and protect them, do something. Right. Do something with these price levels because they're incredibly high. And if you're taking crop losses, the last thing you want to do is take crop losses and then miss out on these exceptionally high prices. So right. I think the big thing is try and protect yourself somehow. Just lock in some of these prices if you're a producer.
Right, certainly. Well, it's really interesting right now to take a look at the soybean complex in particular from the producer's standpoint. We were discussing this earlier. Right now, we're looking at that November contract. Trading at a $2 premium over the July contract here. Obviously, that has a lot of effects on what producers are going to do come harvest. What are we kind of looking at right now in terms of basis for soybeans?
Yeah, one thing that you'll notice is when you're looking at spot soybeans is that in the last week we actually, on the U.S. average, we lost about 18 cents in terms of basis. And so we did see that decline pretty substantially. One of the big things that I think is driving this basis lower, well, of course, we have the hurricane, and that means that the Gulf the Gulf is actually going to weaken. They actually had to shut down part of the river,
right.
And so the Gulf basis weakened. The transportation cost to get down there, that has spiked substantially, and it spiked almost early before the real harvest pressure came off, mostly because of lower water levels. You
right.
had barges, they weren't able to get past certain points of the river, and transportation costs started creeping up there. So that's all putting a pressure on basis throughout the whole river system. And I think one other thing that we're going to want to keep in mind is that I think when it comes to the lower basis on the river, when we look at the average of these river terminals, last year we saw lows we saw lows right around September 15th, 16th, and 17th. That was the area where we saw lows. Now, talking to a bunch of people, it's like we're going to be taking this crop off early this year or earlier.
Right,
so you think would you have the harvest lows be a little earlier? I do not think that's the case. I think that the U.S. river terminals are going to continue trending lower, or at least stay at these depressed levels, simply because of the forward curve in the futures market.
Right.
There is no incentive for producers to store these beans. The carry is not there. And I think that is going to put pressure on harvest. It'll continue to put pressure on harvest, and I would not suspect that river basis is going to bounce off of these lows at least in the first part of the September.
Right.
I think that we're going to stay.
So right now the market is telling producers to sell it right off the combine this year. No storage here going through the winter.
Yeah, I mean, like you said, $2 discount between November and July, and I just think that's. There's just no incentive for a producer to store it.
Absolutely not. Well, if you have any questions about your local cash market there, you can certainly give us a call here at the office. I think that kind of wraps up a show here for Friday afternoon. Cody, thanks a lot for joining us. Everybody out there, have a great weekend. We'll see you back here on Tuesday.
Take care.